Let's talk about a sector that is, well, pretty notorious for just destroying investor wealth: road construction. And our case study today is KNR Constructions, a company that seems to have cracked the code. They found a way to not just survive, but actually do well in what many consider an investment graveyard. We're going to uncover the simple but really powerful rules they live by to win in a game that feels like it's rigged for failure.
Let's just start with this brutal truth. And look, that's not just some snappy headline. For most investors, this is a painful, expensive reality. If you look back at the history of the Indian infrastructure space, it's just littered with the wreckage of companies that looked amazing on paper but ended up collapsing.
So, you gotta ask, what is it about this sector that makes it so lethal? Why do so many smart people get it so wrong, over and over again? Well, it's not just bad luck. The failures, it turns out, are shockingly predictable. This right here, this is where investors get totally trapped. You've got companies bidding ridiculously low just to say they want a project. They get sucked into these high-debt models, their cash gets squeezed by clients who pay late, and then of course, they start playing games with the accounting to hide how bad things really are. These are the classic death traps.
Okay, so this leads us to the core of the problem, the great illusion that so many of these companies create. It's this massive gap between the profits they report and the actual cash or lack thereof in their bank accounts.
You want to know the biggest lie in the infra world? It's this: a huge order book. A company will put out a press release. We've won thousands of crores in new projects, and the stock pops. But here's the thing: an order book is just a promise of work. It tells you nothing about whether that work is profitable, and it sure as heck isn't cash.
Now take a look at this, because this visual just lays the problem bare. On the left, that big blue bar, that's the profit a typical failing company reports. Looks great, right? But now look at the red bar. That's the actual cash they generated. It's tiny, or even negative. This business is literally bleeding cash while its income statement says everything's fine. You know, the business model a company chooses is literally a life or death decision here. On one side, you have EPC. It's simple. You're a contractor, you build the road, you get paid. It's low risk. On the complete other end of the spectrum is BOT. Man, this is the real killer. It's a huge leverage gamble where you build the road, you own it, you operate it, and you take on mountains of debt hoping it pays off. And somewhere in the middle is HAM, the hybrid model, where the risk is shared, but cash comes back to you pretty slowly. Understanding this choice is everything.
So, with all these landmines everywhere, how on earth has KNR managed to avoid them? Well, it's because they're playing a totally different game. Let's dig into their survival playbook, which is basically built on saying no to all the things that tempt their rivals.
It all comes down to their 4 rules of survival. And honestly, they're almost the exact opposite of what everyone else does. They are super disciplined when they bid, meaning they'll happily walk away from a project if the margins are too thin. They are fanatics about getting projects done fast. They avoid debt like the plague, and most importantly, they are obsessed with cash flow, not feel-good numbers like the size of their order book.
This quote really gets to the heart of their entire philosophy. Think about it. Anybody can win a contract by underbidding, that's cheap revenue, but generating actual, real cash from that project, that is incredibly hard. KNR gets that cash is the only thing that matters in the end.
And this is why speed is their secret weapon. For them, finishing a project ahead of schedule isn't about bragging rights. It's about money, pure and simple. You avoid costs going up, you get your final payments way faster, and you pay less interest on your loans. In this business, time is literally money.
Okay, so we've heard the theory, but you know, talk is cheap. Let's look at the hard evidence. Let's see how this discipline actually shows up in the numbers. It's time to bring out the cash flow lie detector.
So, it all boils down to this one very simple question. Do the profits that KNR reports on paper eventually become real cash in the bank? This is the one test that matters for any infrastructure company, period. And here's your answer. Remember that scary chart from before with the huge gap? Now look at KNR. The red bar, their cash from operations, pretty much follows the blue bar, their reported profit. Yeah, sometimes there are lags. That's just how government payments work. But the key is, it always catches up. This is what real profit looks like.
And you see this discipline everywhere on their balance sheet. The money owed to them by clients, the receivables, they keep it under control. They don't let it balloon. Debt, for them, it's a temporary tool for a specific job, not a permanent crutch they lean on forever. And their exposure to that riskier HAM model is very, very selective. And this number right here is the proof in the pudding, a consistently low debt-to-equity ratio. This just screams that they hate leverage. This is their insurance policy. By keeping debt low, they know they can survive the inevitable bumps in the road that absolutely crush their competition.
All right, let's bring it all home. Let's see how this all comes together. KNR's greatest strength isn't how big they are or how fast they grow. It's something much less exciting. They're incredibly boring. And in this sector, boring is an absolute superpower.
What you have here are operators, not empire builders. The people running the show are focused on the nuts and bolts, the nitty-gritty of project execution, keeping costs down, and managing cash. They are not out there trying to make headlines or chase growth at any cost. That restraint is what defines them.
But hey, no company is perfect, and you have to know the risks. These are the kill switches, the absolute red lines that would tell you the story is broken. If you suddenly see their debt start creeping up, if they start aggressively chasing those risky ham projects, or if they lose that bidding discipline, that's when you worry. These are the things to watch.
So, what's the final verdict here? Look, KNR is not an exciting, high-growth stock. It's not going to be the talk of the town. What it represents is something much, much rarer, and in this business, way more valuable. Boring, survival excellence.
I love this quote because it just nails it. You're not buying KNR for alpha fireworks and explosive returns. This is portfolio ballast. It's that steady, defensive piece in your portfolio that's designed to protect your capital in a really tough neighborhood. It's just built to last.
And that leaves us with one final thought, doesn't it? In an investment world that is completely obsessed with finding the next big thing, always chasing explosive growth, maybe we're missing the point. In a sector like infrastructure, maybe the ultimate prize isn't growth at all, but simply durable survival.